Welcome to this week's live ASX strategy session. Great to have you with me. Plenty of interesting things to have a chat about today with the All Ordinaries. Fair bit going on in those commodities I want to have a look at, and a couple of stocks also, which I think is pretty interesting at the moment, which we'll get to a little bit later on. And as always, everything today is general commentary only. Doesn't take your personal situation into account. So if you need personal advice, you've got to get that separately. Just one more thing before we get into the first chart. I did a podcast through the week, which I think you might find interesting. It was with a best-selling author and a trading mentor, Louise Bedford. She does some really interesting work herself, and we spoke about my early start in the markets and an early influence I had from one of the great traders of the time. And also look at exit strategy, look at one of the areas where I think a lot of people really struggle with. Some interesting stuff. So I'll leave a link for it in the description section below. So if you want to know a little bit more, go and check that out. And now, having said that, let's jump over to our first chart. And so here we go. This is a ASX 200. And we've had some modest weakness since last week's strategy session. And really, though, for the last month, pretty much all of February, the ASX 200 has really been consolidating. It's been trading sideways. It's interesting that this is happening around a major overhead resistance point. So when I compress this, you'll know this level well, picking up those previous highs from 2021 and 2022. And then December, and it's really stalled around that all-time high territory. And the question I've been asking over the last few weeks is whether we get more backing and filling. So from the October low to the recent high, does this require some more backing and filling and consolidation before potentially trying to break to the upside of this range? Or is it a case of that this market it's not pausing and we're just going to get a series of new all-time highs, much like we've seen in the S&P 500? So that's been the thing to consider. As I've said before, I've thought that the larger consolidation was the more likely scenario. That's the scenario which I've favoured unfolding, and maybe something that brought the market back to the around the 100-day moving average. Maybe that took place over several weeks, or maybe a month or two. But like we just don't know. So far, every dip is being bought. And you see these dips we've had along the way. They're being bought quite quickly. The dips have been shallow. So looking at the one from January, it was 4% in 12 days, and then in February we had I think it was a 3% pullback in about 7 days. And then this most recent one was a 2% pullback in 3 days. So the pullbacks are getting shorter, and the rebounds come in. So we've got to entertain that possibility that maybe this market is not going to pause and consolidate for several weeks, like I've been thinking is the scenario to look for. So I think one of the scenarios we need to consider is that we do get an acceleration in the trend. We see this persistent strength in the US. It's like it feels like it needs to pause, but it's not. And it's not. I'd never want to stand in the way of the price action. So I think we do need to be aware that there is a scenario where this market could accelerate to the top side. And the reason I say that is because this has been such a big range. 2 years, the market's effectively gone sideways. And it really is at the verge of that breakout point now. So while a larger pullback is still a possibility, and if I had to say where my favour is, I'd still say that's my favoured view, that there is a pause. Whilst that's the favoured view, if that doesn't happen, I don't want to be caught on the sidelines waiting for a pullback. Should the ASX 200 get above this resistance and start running? If that were to happen, I'd want to be on the field. I'd want to have stocks in play. I'd want to be in the game, not waiting and holding out for a pullback, which may not happen. So look, I'm sure you well and truly know, I'm long stocks, and just using that terminology of long, if you're not familiar with that, it's basically saying I own stocks. I have exposure to the ASX, to the stock market. And I've actually added a bit of exposure through the week, just as buy signals come on, new signals, I'll look at them, and I have been adding some exposure. I'm hesitant to chase stocks. That's one thing which I am hesitant to do at this current point. I don't want to chase stocks which have really run hard. My preference really has been looking for stocks which are breaking upwards from maybe some sort of a trading range or some sort of a pause, maybe a retest of the moving averages and staying a rally. I'm more inclined to want to buy those situations and chasing something which has run hard over several weeks. And I'm seeing them in some of the motion trader signals which are coming through. I'll show you a couple of examples of interesting opportunities a little bit later. I'll save them for now. We'll get to them a little bit later on. And the other thing I'm using, it's those wide trailing stops. If we do get that larger consolidation that comes back to the 100-day moving average, a good trailing stops strategy really does have the potential to see that sort of like moderate pullback off. So that's the importance of making it a wide trailing stop. If your trailing stop's too close, you get any pullback, you often get stopped out. But if the market runs now, as I say, I've got that significant position already on board. So I'm trying to play it both ways. I'm trying to have the positioning in place. If the market runs, use a wide trailing stop to keep me in if it consolidates. But if things change dramatically and the market starts to really come away, I've got to get out points. I'm trying to cover several bases. And I'm also holding a bit more cash than I'd probably like to be holding. And as I've been saying, like I've been looking for this larger consolidation, and this is a thing, we really get these things spot on. We've got a balanced risk, and it's not a case of trying to go for, just assuming you're going to be right, because you're going to get things just not quite spot on. As I say, it's for me at the moment, it's often a case of like, wishing I had more exposure when things are going up, but then when things are going down, it's often the case that you wish you had less exposure. So it's it really comes down to just having the discipline, I think, of that systematic approach. And if you've got that systematic rules-based way of managing your positions, managing your exposure to the markets, I think you give yourself the likelihood of being able to be well prepared for whatever happens. As I've been saying, I'm trying to cover multiple scenarios with the way I'm positioning in the market. And for me, it's now all about keeping that upside open whilst really being aware and managing that risk. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Lets people know you're watching, and YouTube goes and does what it does and shows other people. So it really helps a lot. So please do that. Now, I'm going to move on to the small ordinaries, and then we've got the commodities section after that. Really interesting to talk about gold in that section, and those two stocks I want to share with you. But of course, that wraps up the free section. So if you're not a strategy session member, please have a look below, have a look at what's involved. It's not much. It's really inexpensive to get a foot in the door of this sort of analysis that I do with momentum and exit strategies and so on. So think about doing that. And okay, so let's I think small ordinaries. Let's go and have a look at that.